We always tell young folks, this career is only as good as your reputation. And if you lose that reputation, it can be devastating or detrimental. Sometimes the journey doesn't take us around the fire, it takes us right through it.
Right.
And that was what I was having to learn.
Welcome to Decision Points. I'm Scott Wood, and I'm here today with Brian Jones.
Hey, hi, Scott. Thanks for having me.
Glad to have you, Brian. Brian is the co-founder and CEO of BankCap Partners. So welcome. Brian and I got together probably 3 or 4 months ago and had coffee and
Sure did.
Sort of reconnected.
Right.
We went to Baylor together a long time ago.
Yes.
It's getting further and further in the rearview mirror. But we were at Baylor together, which is where we first met, and then you left Baylor and moved to New York. Is that right?
Correct. Yep. New York, and then Los Angeles, and back to New York, and then Dallas, and back to New York again, and now back in Texas.
Yeah, that's great. So we've crisscrossed paths over the years through financial services. That's been your whole career, and mine as well, and then also with YPO, and then of course the Baylor connection. So,
Sure.
Well, it's great to have you today. So let's start just kind of with basics. Where'd you grow up?
Sure. I was born in Richmond, Virginia.
Okay.
And my father was CFO, ended up being CFO of department stores. And back in the day, there were a lot of them. So grass was always greener somewhere else. We moved around every few years.
Okay. And then where did you graduate from high school?
In Dallas,
Okay.
actually.
Yeah. Which high school?
Lake Highlands.
Okay. So you're a Richardson kid.
I was.
I was
yeah.
too. I went to Pierce, so
Yeah.
a little
Probably was
crosstown rival.
out at a football game or something
Yeah.
a lot of years ago.
Yeah, exactly. And then you went to Baylor.
I did.
And how did you choose Baylor?
My father was CFO of Sanger Harris here in Dallas, if
I
you
remember
remember that name.
Yeah.
And, as you make those college decisions, it's friends from high school and where are they going to college? And Baylor was on the list and just decided to do that. So it worked out great.
That's great. What's just kind of an early childhood memory that sort of shaped you, and from your family, or maybe traveling around or moving around, or?
Yeah, so thankful for my parents and our family and upbringing. I say from my standpoint, the moving around was a great thing.
Yeah.
I don't necessarily think that was true for my siblings, or at least not their perspective. But from my standpoint, it had to teach you how to adapt to a new situation and make friends quickly, and to make the most of new environments. And so I really treasure that experience above a lot of things in our journey.
Are you the oldest in your?
I am the oldest.
Okay.
Yeah.
All right. And then you got younger brothers and sisters, I guess.
do, one each.
Okay, great. All right, so you went to Baylor, and then what? What happened after Baylor?
Yeah, so I was at Baylor. When I first arrived, I thought I was going to go into the ministry, potentially seminary, or into some sort of service work of that orientation. And I had an opportunity at that point. My father was CFO in New York area, and so I would go home in the summers to New Jersey, where they lived. And some friends of theirs were at their church. He was an investment banker for Bear Stearns. So he invited me in to come to just see what they did at Bear Stearns in New York. And so I think it was the summer before my sophomore year, actually after my sophomore year, before my junior year, when he had me come in and see it.
This would have been like 1986?
86.
Okay.
And I was like, this is a giant, there's a giant trading floor.
Yeah.
Just Wall Street, the movie, Greed is Good, Michael Douglas. Imagine that floor, right? People yelling, screaming, and I was just like, wow, that looks so awesome.
Yeah.
And so my family friend said, hey, I think I could get you an internship next summer. And sure enough, he did.
Yeah.
So in the summer of 87, I had an internship at Bear, and that ultimately led to what I thought was going to be full employment. And then the crash of 87, which you'll remember happened in October, and all of Wall Street put a hiring freeze on. And so my path to that seat was not immediate.
Yeah.
And so I ended up having to adapt.
Yeah. So it's a couple things there. It's interesting, and this has come up a lot, and probably because of the age that we all are now, that the whole, Wall Street, Michael Douglas, that movie, that's come up a lot of times on the podcast, but it was a very influential time. I mean, that was a very influencing sort of movie for a lot of people. It was for me, for sure, and pretty intoxicating. So when you saw the Bear Stearns floor, and you had been contemplating ministry. What was the decision point? What was sort of the thing that, that sort of the switch that flipped for you where you said, you know what, maybe it's not ministry right now?
Yeah. It was the excitement of the opportunity. I think I've always been drawn to that.
Yeah.
Right? People who were very serious about excellence in what they did. And you could see that in a really extroverted way on a Wall Street trading floor. And I think that was initially it. And then once I had the opportunity to do that the next summer, which was unique, I was just like, wow, if there was any way, I would have gone to work in the mailroom at that point. I really felt the calling.
Yeah.
It shifted in my mind from, potentially a ministry path to, hey, let's just step out in faith and see what God wants to do with us. Mm-hmm. And for a Baylor guy on Wall Street, that was pretty unusual, certainly back in that day.
For sure.
And so to have that opportunity was something that I felt like God had put before me and was ready to walk into.
So I think you went to Deloitte first, right?
I did. So the crash happened in 87, and I graduated in May of 88.
Yeah.
And so I had no employment offer at that point, so I fell back on the accounting degree, which Baylor's known for, and so that was great, had options to do that.
Yeah.
And I thought I would do it for a year, maybe two, until some opportunity opened on Wall Street, whether it was at Bear or somewhere else.
Yeah.
But what I did was I launched a calling campaign. This is pre-internet, pre-email, pre-cell phone, or early days of cell phones, but I didn't have one. And so I made a list of the 10 or 12 friends I had made from that summer that were full-time, and I set out a calling plan just to make sure they didn't forget about me. That if a job opened and they could fill it, that I was interested, no matter what it was, even mailroom. So that happened remarkably soon, actually in the fall of 88, in that persistent calling effort of every 2 weeks. Ultimately, some of these guys say, hey, Brian, we know you're out there. But it was, I think, again, it was just an inkling that was the path that was really visible to me, and I wanted to pursue it.
Yeah.
And so in the December of 88, I was offered a position to fill in Los Angeles, and I accepted on the spot and started a couple months later.
That's great. It's interesting right now, and I know you've got 6 kids. We'll get there in just a second. I've got, my kids are just finishing summer internships, and the very conversation I'm having with them is make sure you capture the contact information of all the folks that you've connected with this summer and stay in touch with them. Because there may be some future opportunities. And of course, they're kind of like, yeah, Dad, whatever, but it is so important. And, it's a great lesson for our children.
It is. I would say one of my favorite books, and one that through the years in leadership, I have used that platform to require our people to learn. And that's Dale Carnegie's How to Win Friends and Influence People. Yeah. When you take that relational mindset to networking, not, hey, what's in it for me, but how can I bless and care for others and serve others? That's transformational. And for a young person to get that in their 20s can really make for a robust, deep career of relationships, which has really been the joy of this business for me for
that's
so
awesome.
long.
We talk about that at True North actually a little bit, and we use the vernacular of give first.
Oh, yeah.
Like always give first, in every conversation, give first, figure out how you can serve the other person, and don't worry about your needs or, what you need to get out of the situation. Just give first and it'll all come back to you.
Yeah.
That's great.
That's wonderful.
All right. So tell me about your wife and where you guys met and your family.
Yeah. So Pam and I met in our senior year, spring break, our senior year at college.
Okay. Where were you?
Can't remember if you know the answer to that. We actually met on the beach in Acapulco on spring break.
All right.
We were there with some friends from OU and Oklahoma, and they happened to know these gals. Okay. So we met there, and we were engaged 7 months later and married the next year.
Okay, great. Awesome.
Yeah.
And you guys have 6 children?
We have 6 children. Yeah, we set out, I think, to have 2 initially, and then over time just said, we'll let God decide. So 5 of those biological, and our youngest is adopted.
Yeah, fantastic. And the youngest is how old?
14. So we're still
at
throes.
it.
I've got a rising senior and a rising ninth grader.
That's awesome.
Yeah.
That's great. That's great. All right. So Bear Stearns in LA. Tell us about that. And then you were there for how long, and what'd you learn, and what was the decision point that helped you transition to the next thing?
Yeah. So I ended up there 5 years. I was
the whole time in LA.
5 years in LA. I ended up moving with Bear Stearns to New York.
Yeah.
From there, we did. But, I would say a couple of decision points in there, Scott. When I speak to some audiences, this is what stays with them. And so it's a story I sometimes tell. But within 6 weeks of moving there, Bear did not pay for moving expenses. It was an extreme meritocracy. And if you did well, you were rewarded. But they were an interesting firm. And so I had a U-Haul that we had used to move out, and we had rented a 2-bedroom apartment, but I'm sleeping on an air mattress. And 6 weeks in, my boss asked me to go with him and a client out on the evening. And we went to dinner and the like, and then we went to something called mud wrestling, which I had no idea what it was, but it's not what it sounds like. It's not like a boxing thing. And so we show up here, and he puts me in a very compromising situation in front of the client. And then he basically says, hey, if you don't get into the ring and mud wrestle, then you're going to be fired, and you're going to get a pink slip tomorrow. And back in the day, that was a legitimate suggestion, right?
Yeah.
You could have gotten away with that. And I actually went home that night, called Pam, because we weren't married yet. She's back in Texas at school. And I called her. I said, I think I'm out of a job, and I've been here 6 weeks, and I think I'm going to get fired tomorrow. And I tell that story because what I often tell young folks is, if you set out to have a career with character, expect it to be tested.
Yeah.
I did not expect it to be tested in that venue and that quickly and in that way.
Right.
But ultimately, it was immediate, and it was really, really awkward. Mm-hmm. And so as a result, I think for many folks, if you want to have a career built on character, which again, back to that movie, Wall Street and Greed, from the start, my wife with me set out to do this differently, right? To actually serve clients. In my case, that ended up being serving the banks from an investment banking standpoint.
Yeah.
But to say, we're going to represent you in this world of Wall Street that is out there to, in a way, pad their own pockets, not necessarily serve you, the client. And that became a calling card and distinctive. But I point back to that moment as one where, if I had made the wrong decision, a different decision, I think the career would have had a very different path.
All right, so you got to talk us through that. So he tells you got to get in the ring, and then what's the conversation?
So he's bid on the opportunity to go into the ring and mud wrestle with the young ladies in bathing suits. Mm-hmm. And I said, I'm not doing it. Right. And he's like, yes, you are. And I was like, no, I'm not. And he said, yes, you are. And this went back 3 or 4 times. The client is right there. Mm-hmm. And he ultimately, felt like an hour, but I don't know how long it was. But ultimately, the client says, I'm going to go in. And that's how it was relieved. And I was just like, oh, my word.
Wow.
As a young guy to have that kind of pressure, because this was my boss's boss.
Yeah. Interesting. Yeah. I mean, in some ways, like very symbolic or emblematic of the movie Wall Street, right? Like,
exactly.
I mean, just the sharp elbows and the culture of that time. Really, what a powerful lesson to learn at a very early age. So obviously, you didn't get fired. You came in the next day. You still had a job.
Interestingly, so this guy was a bit of a bully, very, very successful what he did. Sales, fixed income sales, extremely successful, extremely well paid. But he was a bit of a bully. And a couple of the guys on the team, the older guys actually, older, in their 40s probably. I'm late 50s now. And they came to me kind of quietly and secretly late that morning and said, you're going to go far on Wall Street because you stood up to this guy.
Yeah.
And thanks for doing that. You did a great job. So they were encouraging to me quietly. They would not have done that publicly.
Sure.
But at the time, they did it quietly.
Yeah. That's such a hard thing. I mean, I was put in some awkward positions like that very young and early in my career, and I'm not sure I made the best decisions always. It's a very challenging situation to be put in.
Sure.
And you obviously learn and grow through those circumstances.
Sure.
All right. So you're Bear Stearns, 5 years, LA, then
5 years. Call comes in to say, hey, would you come back to capital markets desk in New York and build out our banking business there? Okay. We had success on the investment banking side in Los Angeles. I was working for a senior managing director there. And so this was a great opportunity. And Pam and I said, let's do it. I mean, it was not because we wanted to be in New York, actually. Sure. I mean, we liked LA, but we were like, I don't think we can raise a family out here necessarily. And yet the one place in the US that we were less attracted to was New York City. Mm-hmm. But again, it was this opportunity that the firm called and said, hey, why don't you come back? And we prayed about it together and said, we think we're supposed to do it.
Yeah.
And so I ended up going back there, and it was great for my career. So again, it was an extreme meritocracy. If you were successful, you got promoted, you got paid. Mm-hmm. So I ended up in New York, moving up the ranks pretty quickly, and ultimately to partner level or senior managing director in my low 30s.
Mm-hmm. That's great. And then you made a decision to leave and start BankCap. That's what was next, right?
Yeah,
right?
We made. If I may, let's step back just a second, because we were actually there only 3 years, and the firm then asked me to move back and head up a region of the country for financials, and the culture of that part of the business, right? So the capital markets desk of Wall Street have an early in and a earlier to leave culture, like. You could leave at 6 or 6:30 p.m., whereas investment banking strolls in a bit later,
right,
and then stays till 9 p.m. or later.
Right. They stroll in later because they're out all night.
Yeah. But for us, we'd had 2 kids.
Yeah.
The first one was born in California. The second one is now approaching a year old. And Pam and I had always said, hey, this is a great career, but it's hard to find the balance.
Right.
Really, really hard to find the balance. And I was loving what I was doing, loving the people I was working with, but I was like, at any point that it's not working, we're going to quit, because we're not going to let it destroy marriage and destroy family.
Right.
So that's the number one priority over this career. Mm-hmm. And as I thought about that opportunity, doing that in New York was one where I didn't think I was going to be able to find that balance successfully. Up until this point, we were keeping the kids up till 10 p.m. at night so I could see them in the evening. And then Pam, who was fortunate to stay home with them at that point, could, kind of sleep in with them.
Right.
And so we adapted schedule. But once school started, you couldn't do that.
Right.
And school was on the horizon. So I said to the firm, at that point I had a lot of leverage, and I said, I'll do the job you want me to do, but I want to do it out of Dallas. Mm-hmm. And that gave me the ability to work for a boss who was in New York City and sort of manage my own schedule a bit out of the Crescent here and build a team here.
Yeah.
And that's what took us back to Texas in 97. And I really felt like that was a career limiting move. As it turned out, it was a great move. And again, some of these things that you think on paper are not ideal end up being great moves. And so a couple of years later was when I made partner here. And then in 2002, really decided that at 36 years old, I don't think I want to do this when I'm 50.
Right.
I've had a great run, and most people would have stayed, right? You're one of 200 partners in a big firm.
Yeah.
But I really felt emboldened to step away and say, okay, what might there be next? And that led us to leave for a different corporate opportunity.
Mm-hmm. And what year was that? 97?
2002.
2002, which was sort of 5 years ahead of the great financial crisis, which obviously we know what happened to Bear Stearns in that. And so
exactly,
you probably dodged a pretty serious bullet.
Financially, it was, I still felt it because I ended up keeping my shares.
Yeah.
So I felt the financial pain of it, but from a career standpoint, obviously, it was nice to not be there.
Right.
But a lot of friends. It became a family place. I mean, 30-something% of the stock was owned by insiders.
Yeah.
So when that went down, it was extremely painful for a lot of friends, and a lot of folks who had. So in God's kingdom and his leading, it was good that we weren't there.
Yeah, that's great. All right, so then you make the decision to leave, and then is that BankCap now? Is that the next?
No, so I ended up thinking at the time I was going to be CEO, but wanted to be CEO of a public company, and so I realized that nobody in their right mind would hire an investment banker as CEO. You kind of have to figure out how to run a company first,
right?
Even though many think they can, it's a different skill set. So I left to kind of do that. So I took an executive vice president position at a publicly traded fintech company that served banks.
Okay.
So the clients were very similar. I knew a lot of the people. And I did that for about a year, and then the company ended up having some issues, and ultimately, as part of Fiserv today, it got sold through that to Fiserv, and that's when I was still wrestling with this whole idea of, Scott, of calling to ministry or calling to business. Even on this whole journey with Bear Stearns, for 13 years there, and now here, it was sort of like, okay, God, is this where you want me, or is it better to be in a ministry, quote unquote, position? So I actually went on staff at a church here in Dallas for 2 years in a leadership position, while doing some seminary and exploring the idea of a mid-career shift, and did that for 2 years.
And that was full time.
It was a somewhat 30-hour a week type situation, and then.
But that's what you were doing. You didn't have other things going on.
I was doing some business consulting on the side. Just couldn't stop. I mean, it was so funny. I mean, Pam's like, Brian, are you serious? Okay. I mean, the path to a full seminary degree is a long one.
Right.
And so she's like, I don't know if you have the patience to make it through. Her father was a pastor, and so she's like, because I'm day trading in class, so class would get boring. I had a computer at that point in the back of the classroom, and I'm like, I think I can make a little money on this stock in the next hour. And so I think during that season, Pam and I got to the point of saying, maybe we're called to the mission field. Like, we got to the point of we traveled to China, we traveled to Japan. We got to the point of saying we're fine to sell everything and move. And so we spent a month there exploring this idea of, okay, is that what maybe we're to do, is to go serve in some way in a foreign place. And out of that trip, we came back saying, no, I think the calling is business. The calling is this community that we're in. My passion, my interest, my motivation continues to this day, right? To be in the relational pieces, we talked about that, but then also in the strategic pieces, the multiplying pieces, the intentionality around investing and generosity and the things like that. So in 2005 is when we started BankCap. Jody Grant here, founder and CEO of Texas Capital Bank, approached me in the year before and said, hey, I've got this great idea about a private equity firm to invest in banks, modeled on what we did at Texas Capital. I think you're the right guy. What do you think? And I said, well, I'll see if my schedule frees up. And sure enough, this was the door we walked through. And that was the start of BankCap in 2005.
That's great. One of the things we talk a lot about on Decision Points, but also internally at True North, is just this idea of purpose. Our purpose as a company is about fulfilling lives. And really, to unlock that for our clients and our relationships, it's about understanding their purpose. And one of the things I'm gleaning from our conversation today is just how purposeful you and Pam have been, really over the entire arc of y'all's marriage and your business career. And we've got more to come here in the next few minutes, but I just wanted to pause and acknowledge, how purposeful you guys have been. And
thank you, Scott.
It's so good when you have that, because then all the other decisions underneath can get oriented around that. But without that, it's hard to do estate planning. It's hard to do philanthropic planning and the different things that come with with wealth management, just in our vernacular.
Sure, yeah, and what you do is what you guys do at True North is so awesome, because I think for so many, they're spending their time in their career and then they have a great some sort of exit event, and now you have the the money to do something with. But what we found on my career in Wall Street was, money has tentacles like an octopus to grab your heart, that you have to treat it as if it's dynamite,
right?
Because it will grab your heart in ways you don't understand and then ultimately destroy you if you're not careful. And the only antidote that we found in our experience is generosity and giving and intentionality. So for us in 2005, we said, okay, we're going to set up a foundation ourselves, and we're going to be intentional about building the generosity piece as hopefully, we're going to be successful in BankCap and in the other investing things that we're doing, so that we're doing those together and growing those together with that intentionality. Now we're trying to bring in the rest, the kids as they've gotten older,
right,
into that mindset as well.
And your oldest is how old?
32 now.
32. Okay, so we got 32 to 14 as the range.
Yeah, and 4 granddaughters.
Yeah, that's awesome.
Super fun.
All right, so we start BankCap with Jody. You guys had 2 funds.
We did.
Made about 10 investments. Have you exited all those now?
We are out of all of those.
Okay. Yeah. And I know I think you had a 2.5 times return on capital.
Over all of those.
Overall.
Yes.
Yeah. Yeah. That's fantastic. So that was a good experience, I'm guessing.
It was a great experience.
Yeah.
Right. And, we could get off on a tangent, but I really love the banking industry. I think part of the reason that the U.S. form of capitalism is the best that we've seen in the world, with all of its brokenness and problems, is partly because of that engine of banks. Right? We have more banks than any other country in the world. Right? Even today, even after we've gone, when I started in this business, we had 30,000 banks. Today we have 4,000 to something. But 4,000 something is huge when you think about the UK or South Africa or Australia or these other, Canada. I mean, they all have 30 or fewer banks. And so you've got banks out there looking to serve their customers with 10-to-1 leverage and provide loans to entrepreneurs and enterprising folks who have great ideas based on trust. And if we can extend capital and bring capital to people who are doing that with character and doing that with for the right reasons and that right kind of intentionality, then they can see the next great entrepreneurs that end up with Google or end up with Meta or whatever it might be. But those things all start with often a character loan,
right,
by a banker somewhere to some young person who's got a great idea.
Right.
And the more we can do that, the more we can encourage that, the more we can empower the banks to be able to do that. I think it's good for our economy and for our country and for human flourishing more generally.
So with the BankCap experience, what was your big, what was the big takeaway, and then maybe the decision point to then make the next change? And I guess at this point, we're probably moving to Archegos. Say that right?
Yeah, that's a great. Yeah, so the short version of that is what we learned in the private equity experience was, and I'm sure many of your listeners and investors and clients have some private equity type investments. But what we found was that for a dedicated private equity fund that you raise on day one and you return capital, say on day 10 years later, that oftentimes the macro environment plays a huge role on your ultimate returns. More so in banks because of what the Fed does and what's going on in the economy, and a lot of things may be more out of their control.
Correct.
And so our first fund, both our funds were, I would say, top decile performers. But the first fund was 06, 07.
Right.
And we had to really, really fight for, our returns. Right. And we made money on all those investments, but, not nearly what we did on the second fund, which was raised after the crisis, and our timing was right.
Right.
And that learning emboldened me to say, I think the right way to invest in this is through the public markets as the core engine and privates more selectively.
Yeah.
And that's what we do today.
Yeah.
So we invest in the public markets because there are, believe it or not, 800 publicly traded banks.
Okay.
And then more broadly, we do financials and financial technology and some of the other enabling things. Back to the question you asked, when Pam and I and the family moved back to Texas in 97 as early as 3 years later, we're exploring moving back to New York. The firm wanted me back in New York. I had an office in New York, so it was like the worst of all worlds at that point. I had moved here for balance, and now I'm a senior leader in the whole group, and I have an office both places, and so I was on the road a lot. And we said, if we're going to keep doing this, we're going to move back. And so as early as, call it 2001-ish, we were going to potentially move back to New York, and the timing wasn't right. We were just open to it, but we felt God saying, "Hey, maybe not now, not now." And in 2013, we did go. So our oldest had just gone off to the Naval Academy, so he was a plebe there.
Yeah.
And then the other 5 were with us, and so we embarked on this grand adventure of 5 kids on the Upper West Side of Manhattan, and trying to move back to New York. One, to finish the second fund that we're working on, right? We're still raising it a little bit and then investing it as well. But realizing in my heart that I wanted to learn the hedge fund business, right? Because that's the right way to do what we were doing. But again, you need to know it's a different mindset, because you have to be comfortable making or losing a lot of money in a day,
right? And
emotionally being able to handle the mark to market that you don't have to live with in private equity.
Right.
If things go down for a year or two, you're like, someday it'll get better. But in the public markets, you're staring at it every day. So that's partly why I went back to New York, was to go, okay, I need to figure out the public market side and get some credibility and track record. And that's what led me ultimately to work with Bill Hwang and Archegos starting in 2015.
So how'd you get connected with Bill?
So Bill and I met at church, through church. A mutual friend introduced us.
In New York?
In New York.
Okay.
Bill's a Christian guy, and he was doing a public reading of Scripture out of the office. And so this would have been probably, we had just moved there, so it would have been late 2013. I show up in his office, and we just became friends. And he's at that point a near billionaire, and very prominent, well-known hedge fund manager in the tiger management world. A tiger cub is what he would be. Yeah. And so he and I just became friends, and ultimately he asked me to teach him and his team about U.S. banks, because he had started and run Tiger Asia. Yeah. And he was moving the family office into U.S. And I said, great, this is a great chance as long as you teach me the hedge fund business. Right. And his returns up until that point had been spectacular. So it was in 2014, that was just friendly. In 2015, he asked me to join as a consultant. And in start of 2016, I became an employee while still overseeing the BankCap stuff.
And so tell us about that ride.
Yeah. So 2016, I'm now an employee. We have about 35 people total at the time. Bill and I share this mission, purpose, vision of, hey, salt and light on Wall Street, wanting to make a difference, again, relationally caring for people, as well as competitively driving for outstanding returns. Right. So I joined as head of research, global head of research, I think it was the title, and at the start of 2016, overseeing the research team. We grew that from 10 people at that time to, including consultants, about 50 5 years later. As the fund's size grew, and this is all Bill's money. There were no outside investors. And so it was a really wild run, because the firm kept growing up until, I think right before COVID hit, Bill's net worth was about $5 billion.
And how old is Bill?
He's a couple years older than I am.
Okay.
So he's low 60s.
Okay.
Yeah. So that was it's a fascinating place, because we're long-term management-friendly investors. It's a hedge fund, but we're looking for opportunities. And Bill's track record from, the numbers would be from, let's say, 2001 to 2020, so a 20-year track record, his average IRR was in the high 20s, which is spectacular. I mean, that's like 2 times Warren Buffett. So this, from my standpoint, it's a great place to learn how to run a hedge fund.
Yeah.
And it becomes a place that we're trying to teach others, like our employees and our consultants, this mindset of how do you do that well. So it was a wild, busy time as this was growing, but the influence of the firm was growing as well.
Yeah. And so just to back up for a second, so Bill started this in 2001.
Started Tiger Asia. So Bill worked for Julian Robertson and Tiger in the late 90s.
Okay.
And Julian then returned outside investor money in about year 2000. He got frustrated with the tech bubble that's emerging, and he was he ended up returning outside capital, and he kept 4 of his best people. Bill was one of those. Chase Coleman, who now runs Tiger Global, was one of them, and then 2 others that you would know. And he kept them, I think, for a year or 2, and then he basically said, okay, now you guys go run your own funds.
Yeah.
And that was when Bill started, and he started with $15 million from Julian and $1 million of his own money, and it ended up being over $10 billion within 10 years.
Wow.
Yeah, I'm with outside investors.
Amazing.
So he did that until 2013, and then he did the same thing Julian did, which is return that outside capital and turn it into a family office where he was the only investor.
Got it. And so you guys are riding along and everything's great and making good returns, and you're there and everything's working really, really well. And then what happened?
COVID hit.
Yeah.
So I remember March 1st, 2020 was the day my first grandchild was born in San Diego. And that was the first case in New York City. And as we all know, by mid-March, the world's shutting down. We also shut down as a firm in terms of being able to meet in the office. But as the fund's performance, right, the stock market's still open.
Yeah.
And Bill's net worth collapses, right? So the fund's positioning is such that, the $5 billion drops over the next 2 weeks. And Bill is just a phenomenally courageous person. And he took the position that this is going to turn. And he was right.
Yeah.
And so his timing was great. He increased leverage starting then and started to build out a new portfolio that ended up $35 billion at its peak a year later. Wow. But in that, there was a change of strategy versus what had been done before. But I'm just overseeing the research team. So Bill was the hedge fund manager, and so he's utilizing our research team in a very active way, and everybody's working all the time and getting burnt out and from home. Yeah.
So it gets to $35 billion a year later, and then what?
In late March, on Monday, the firm's value is $35 billion, and on Friday, we'll not jump ahead just yet. On Monday, that's where it is. I'm on spring break in Texas, actually, and on Wednesday, I got a phone call from the co-CEO. At this point, I'm co-president, but the co-CEO with Bill calls me and says, hey, we had a margin call. Don't want you to be unaware that it's out there, but think it's going to be fine.
Yeah.
And then by Wednesday night, the day didn't go well. And on Thursday morning, it became apparent that it was going to be a problem in terms of the ability to meet that margin call, but certainly did not look like it was going to be fatal at that point. It just looked like it was going to be a challenge. And, as the day went on, by Thursday morning, I'm like, hey, maybe I should come back and be another set of hands to try to deal with the crisis. And we agreed that was a good idea. So I caught a 7 p.m. flight Thursday night, flew back to LaGuardia, landed at 11 something, and called the office and said, should I come in? And they're like, yeah, come in. And we worked all night trying to stave off the the looming disaster. And then Friday morning at about 10:30, the prime brokers all exercised their rights and took their collateral, and it was a fire sale. And within minutes, the firm's net asset value was negative.
Yeah. Wow. So obviously, unbelievable rise, unbelievable success, followed by utter devastation from a financial perspective.
Yeah.
Talk to us a little bit about how that affected you personally, because I know that, watching the rise and, just what was happening and the, sort of the benefit, all the employees were benefiting the way the structure of the firm was set up. And so there was a lot of upside for everyone. And then all that was sort of stripped away in a minute. Just maybe talk for a minute about how that affected you personally, and then, what's changed since then, and kind of, where you are today with the book. And
Sure. Yeah. So, the employees were significantly harmed.
Yeah.
Right. Because as we had structured it, or as the firm had structured it, there was a deferred compensation piece that benefited as the firm's success rose. And so that was nearly $1 billion for the employees that were there.
Wow.
And so there was a lot of, when that went to zero, a lot of folks, it was everybody in the firm participated. So it was not just senior people, it was everybody. And it was designed to give alignment, right? And share in the success of the firm, because there was no other way to invest. And so that was in and of itself devastating. And then, everyone loses their job immediately for the most part. We only had enough, there was only enough cash on hand to sort of pay base salaries for a couple of months, and then that was over. And so pretty immediately that next Monday was, hey, you need to start finding another job. So but because this was headlines of every major financial newspaper across the world, there were so many questions that it was hard for a lot of our people to find comparable employment with the cloud that was overhanging it.
Yeah.
Today, that's less so, right?
Yeah.
We would start back. We had charges brought against a couple of the Bill and a couple of my former colleagues. And then that trial is now over. But still, it's taken a while. I mean, that's 4 years, and it's still been in the headlines. And so it's been a real challenge. Personally, I was scheduled to leave and go start my own hedge fund before, in much the same way Julian had done with Bill. I was on track to do that a year or two before all of this happened. And then for various reasons, it just kept getting delayed. So it was, had a team in place and everything else. So it was a real challenge to kind of pivot from that. I was on a very large public company board, $20 billion market cap, stepped off of that to try to not draw any attention to that situation. And then my ability to raise institutional capital was also harmed. So, it was one of those things where, for reasons not your own, of your own making, not your own choices of sort of what led to this, you end up in a really devastating place professionally, and then having to deal with the aftermath of that for you, for your people, and for and then ultimately not just for us, right? The banks lost a lot of money in their relationship with the firm, and many of the people who covered us or worked for us also had very career damaging shrapnel fallout, if you will, from that. And so it was a painful process to have to go through. You spend a whole career, especially on Wall Street. I would always tell young folks, this career is only as good as your reputation, right? And if you even lose the appearance of that reputation, even if there's nothing behind it, it can be really devastating or detrimental to that. And that was ultimately the situation I found myself in.
Yeah.
And realizing that through that, the sleepless nights, what could I not see? What could I have done differently? What just happened, right? Just the deer in the headlights of actually learning, from what Jesus said in the book of Revelation. He says, I advise you to buy from me gold refined by fire. None of us like the fire, but we want to be the gold refined by fire.
Right.
And sometimes that fire just comes, right? Whether for me it was business, but for so many of even the listeners here, I mean, it could be a personal thing. It could be, there's so many things that, sometimes the journey doesn't take us around the fire, it takes us right through it.
Right.
And that was what I was having to learn, in these moments.
And so now the book.
Yeah, it's been helpful to me to try to process that. I got a ghostwriter to help me start to lay out what some of what we've talked about today, but also this emotional journey of the last 4 years and the rise and fall of the firm. So that's been great.
Was the book really did you intend to write a book initially, or were you just really sort of putting thoughts on paper to process everything that had happened, and sort of your way of dealing with some of the the heartache and the challenges and the questions, and or did you sort of say, no, there's a story here that I need to tell?
It's a fascinating story.
Yeah.
I think there's probably more to come out. I mean, obviously there's been a lot written about Archegos, about Bill. He's himself a rags to riches story. Mm-hmm. What I wanted to do was sort of tell my journey of, so often, especially on a podcast like this, the story is, hey, I did all these things and it was an up and to the right story, right?
Pretty
it's
linear progression.
Do this and success follows.
Yeah.
And, here we are, at least on paper, the career is doing well.
Sure.
The career progression, we're trying to do excellently with the family, with 6 kids, stepping into special needs adoption, all those sorts of things. And then you start going, well, I thought I was doing all these things right? I thought I was, God, how can this happen? And, what did I miss? And, just the what ifs and the challenges of that. I think for me, it has been unbelievably challenging, but really excellent. So it's like Job, right? I've just been so connected to Job through this experience, because it's like the lightning strikes and things go away. And ultimately it's where are you anchored when that happens? And, it's, a mentor of mine said, the subtitle of your book should be, how losing $100 million can be priceless, right? It's partly that, right? We don't choose those things, but those actually are the forge that lead to transformation. The fire is what we want the result of that, but often we don't, we don't want the pain of it.
Yeah.
And that's what I'm trying to get to in this book, right? Which is, at least tentatively, it's called Wall Street Faith, but it's hopefully designed to give God glory, because it's just stepping in, saying yes to the next thing, which was our journey, right?
Yeah.
It wasn't like I set out to go, I want to be partner of a Wall Street firm and then do private equity and do all that. It was just like the next yes was what we were asked to say yes to.
Yeah.
And the next yes was there. It was not this well-planned thing. It was just, let's see what happens here. And sometimes that can be really challenging, but I am thankful to have been in the arena, still in the arena, with the scars and the bruises and the bleeding, and hopefully from here press forward into whatever God has next, right?
Yeah.
But that's the story of what we're trying to capture in the book.
And I have to think too, at this point, how old are you?
59.
59. So, you look back at the arc of everything that's happened, and before we went on camera, I asked, where's your energy today? Like, what's the thing that you're most excited about, or that you have the most energy around? Because, as I look at the arc of your life, you've accomplished so much, and you've had so many varied experiences and pretty much had success in every single one of those experiences. And even at Archegos, there was success there despite the outcome, and tremendous learning, obviously. But how would you say, as at 59, thinking about, you've got a 14-year-old at home, you've had this incredible Wall Street, private equity, financial services experience. What's next? What do the next 10 years look like for you and Pam? And, you could call it a second half, or a, maybe it's the fourth quarter. I don't know I don't want to define it for you, but what's next?
Yeah, sure. Yeah, thankfully I was actually in the halftime. There's a book called Halftime.
Yep.
And out of that, which was written by Bob Buford probably 25, 30 years ago, they started a Halftime Fellows group. And I did that in 2019, before all of this happened. And then I remedially did that again about 2 years ago.
Yeah.
And so I've now done that twice. So I've been able to kind of spend some time getting clear on, or at least clearer. I think it's never that clear, but clearer on what that journey looks like. And I would just say for us, that is definitely sort of a legacy mindset of thinking, right? You know, I do, you know, we've had this foundation, which is something Pam and I love doing together, and we'll continue to press into that and continue to try to be intentional in modeling how we do that, right? Because we found the dollars don't matter that much. Like if I think one of the takeaways from the Archegos situation is, you know, Bill was a Christian guy and he had $1 billion in his Christian foundation. The 35 would probably have ended up there too. So if God really needed our money, then the firm, you know, he doesn't need our money. You know, he has cattle on 1,000 hills. So for us, it's being faithful with what you have, whether that's millions, whether that's thousands, whether that's billions, whatever it might be. I think this is a faithfulness journey of being intentional about that. So from our standpoint, with what we have, which is a lot less than maybe it would have been had things turned out very differently, but you know, we're trying to model in our experience how to do that well, trying to tell this story a bit of encouragement, hopefully to others, because we need people to step into hard places. We need people to go, okay, stepping in and being a faithful person on Wall Street's not the easiest thing to do. But that's true in so many careers. We need CEOs who step into that. But to get to be CEO, you got to start at 23 years old somewhere. And you've got to make a lot of hard choices and intentional choices to say, I'm going to step in and expect God to provide, but I'm not going to destroy marriage and destroy family along the way. And if that's what I have to do, then I'm going to find something else. That's not my journey. So for us, it's sharing some of these experiences as one of the key passions. Interestingly, from a professional standpoint, I did explore in that season. I really just took 9 months after this all happened to go, okay, what are the things that we call a family office could do? Could buy a bank, recapitalize a bank with other, investors, all sorts of different things. And I ultimately said, what I'm passionate about is I actually learned a ton of things from Bill about how to run a hedge fund really well, right? Notwithstanding that last year and whatever happened that was different. The fundamentals of what Julian Robertson does and all of these Tiger guys do and everything else is the factory is the machine that I was in. And that's what I love. And I really felt like that was a great opportunity because it connects the relationships of, whether it's some investors that invest alongside of us or whether it's the leaders of these businesses that you can encourage or bank CEOs, some different things. So we've regrouped, or I've regrouped and building the next generation of BankCap around this hedge fund and then the private investors. So we're trying to be excellent in that world but also doing it in a mindset of generosity that's sort of partnered next to it.
Yeah, that's amazing. Well, it's interesting. Thank you.
Sure.
For sharing.
Yeah, absolutely.
We're all given unique gifts and talents, and I think we're called to steward those gifts and talents, well. And obviously you have a talent for business and finance and the ability to make money and create capital. But then you also have this tremendous heart for giving and philanthropy and, honoring God's will in your life through your foundation. And so marrying those two things together can be a powerful force for good. So, Brian, thanks so much for joining us today on Decision Points. It's been a pleasure to have you.
Thank you, Scott. It's been really great to be here. Appreciate it.